Hello, Jaguars. This is Fahad. Earlier today in the chat room, I presented this ratio chart that's right here in front of you, and I asked, would you buy it or would you short it right here? My answer is you will buy it over here, get long over here. And this ratio chart is Amgen versus AbbVie. So long Amgen, short AbbVie. If you did this ratio spread previously, you would have been losing money all year, making lower lows, lower lows, lower lows. So long Amgen, short AbbVie has not worked. Now, I think the flip side is going to happen. I expect this ratio chart to break out and move higher, which means Amgen on absolute manner as well as on relative to AbbVie. Expect Amgen to outperform from here. So with that said, let's take a look at Amgen. Here is the annual chart. Here's the daily chart. Now, a couple of things I want to point out. Here is this major volumeable price resistance right around 165. Amgen comes up to 165. This is last year in October. Stalls and comes back. Then comes up, stalls, comes back. Third time, fourth time, came up to 158, 159, came back again. Fifth time, sixth time, seven times. How many times are you going to poke your head through this towards this 165 level and then back off? Ultimately, it's going to break out. And when it does break out, I don't think anything is going to stop it going all the way to 180 plus, to previous 52-week high. To show you this perspective on a weekly chart long term, take a look at this. Now, what I'm going to do is I'm going to remove these moving averages just to make it clear right here. Okay, so here is Amgen, and it comes up to this 165 level, comes up to this 165 level, call it 163 to 165, and it pulls back. Yeah, it is a slight chance that it may pull back again, but I believe that this is setting up for a breakout based on the events that happened last night and this morning. Give it some time, and investors are going to return back to this. On the long-term weekly chart, you see this big MACD that's basically forming a large rounding bottom. So here's MACD line that came down. This is 2015, then this is 2014, then 2015, and then 2016, and it's finding this large rounding bottom with MACD starting to turn higher. I expect this MACD to rise as the stock breaks out and makes a run towards previous 52-week high, all-time high, I should say, all the way up to 180. Same thing with RSI, large rounding bottom. The RSI and MACD both went from making lower lows to higher lows. And I expect the same thing for the chart to do from here as it breaks out. It's going to break out, probably pull back, do some zigzag, 2 steps forward, 1 step back, and then gradually make a run towards 180. So that's my technical view on the stock right here. I expect this resistance of 165 is no longer going to matter. On the option side, there's a little bit of upside call action, but not significant. Just want to be very clear about this. The one thing that caught my attention today a little bit earlier was there was some 500 August 165 calls that was bought. Nothing significant, very small amount, not much bought. And then previously, as recorded in Activity Tracker, I mentioned that there was put sellers in this previously, which was a couple of weeks ago. They were selling out of money October 155, 150, and 140 puts. It's all in these open interests. So overall, slightly bullish bias. I know I'm not pointing out towards any specific large block orders, but keep in mind one thing. Amgen is the type of a stock that does not usually see large bullish positioning that goes out several months and several quarters. This is the kind of a stock that basically sees small little positioning based on the upside, based on a specific catalyst, and then the expiration comes and those call positions are closed, and then basically the volume dries up and then they come back again. It does not see consistently long-term positioning. It sees random options being bought here and there, here and there. So nothing significant to point out in the option side today, but do not be surprised with earnings coming up on July 27th right here. You're going to see probably in the next couple of weeks some call positions start to build in this, and we're going to be obviously looking at that very closely, and something happens, I'll flag. All right, so that's that view. Now on the option side, on the fundamental side, Here is a view that gets my interest. So first what I'm going to do is I'm going to just quickly, where did that go? My street research, right here. I'm going to quickly pull up my research and I'm going to show you a chart or a file that I got from Bank of America today. This is the kind of view that gets my interest, but the street does not get a hang of it until much later. What happened yesterday, late yesterday, was quick background first. Biosimilars came to European market about 2 years ago. Biosimilars are basically based off the same science that is used in making the original drugs. And biosimilars started coming to the market in Europe about 2 years ago. And they have been extremely successful over there. Amgen has a lead over all biosimilars that have come to the market in Europe in the last 2 years. And Amgen has been trying to press the same thing in the United States. There is not a single biosimilar drug approved in the United States, even though they have been selling in Japan and Europe both for the last 2 years without a problem. The difficulty in the United States is patent protection. The patents, the companies that owns the patents to the original drug, they're going to litigate those patents significantly in the courts, and they drag on and drag on. What happened yesterday is a major win for Amgen. But whether this drug will launch in the coming quarters or couple of years is still questionable. So I'm going to just lay out the background over here. Humira is the lead drug that sells in the United States for arthritis. You probably guys, you see all the advertisements, commercials on TV all the time, Humira. Humira is owned by AbbVie. And Humira produces about $16 billion in annual revenues for AbbVie. The problem is that the Humira is being attacked by multiple companies. One of the companies we have talked about in the past is Eli Lilly's partnership with Incyte, which is making another competent product based on a better formulation that's going to be coming out sometime later this year. Amgen is the first company ever that yesterday got 26-0 FDA panel approval for launching the first biosimilar for Humira. That's what happened yesterday. It's called ABP 501, gets vote for approval. The Arthritis Advisory Committee met today to discuss Amgen's biologics BLA applications for biosimilar ABP 501. And the approval was given with a huge confidence vote of 26-0. The catalyst is now September 25th. This is when, under the Biosimilar User Fee Act, BSUFA, the FDA is going to decide whether they're going to approve this biosimilar drug that is produced by Amgen, but the original rights of the patent for Humira are controlled by AbbVie. AbbVie has protection exclusivity for Humira until 2022. AbbVie has already made this case in several press releases that they're going to litigate this all the way as much as they can. And obviously they should, because it's $16 billion in annual revenues at stake over here. All right? And so the problem is not whether the FDA will actually approve the drug. With a vote of 26-0, I'm pretty confident that on September 25th, Amgen will get the approval for this biosimilar. What we don't know is whether this drug will immediately launch in the market or not, because AbbVie is going to be litigating this in the court. And it could take 6 months, it could take a year, it could take several years. I don't know. But the patent we know for AbbVie expires in 2022. Considering there's a big history now already developing in both Europe and Japan, with biosimilars already selling for the last 2 years and very successfully with no disruptions in the pharmaceutical sector over there, makes me think that not only the FDA approval will come on September 25th, but also I don't think it's going to be as long as 2022. I think it could be possibly within 12 months after that you may get the FDA, you may get the launch. But I'll be honest with you, I have no idea how the lawyers are going to fight this out in the court. Either way, one thing to keep in mind, why the September 25th is so important. Once the FDA approves the first biosimilar drug, especially as big as Humira, it's going to open the floodgates, because it's going to set a precedent for a whole bunch of other biotech stocks that are also making biosimilar drugs. It's going to open the floodgates of approvals that are going to come in the next 12 months or 24 months, in basically next 2 years. I've read so much research about this that there are some forecasting out there that as much as $50 billion. Right now, the total biosimilar revenues in the United States is zero. I've read some research that as much as $50 billion of revenues will be generated by this industry in the next couple years by 2020. But we have to settle the first one first. The FDA has to approve the first one to open the floodgates. And I think that catalyst may serve as September 25th, not only for Amgen, but basically the entire class of new drugs that are coming to the market. Also, I want to mention another note that came. This one came from Amgen, from RBC Capital. This was also yesterday, 2 days ago, or yesterday actually. Now, this is something interesting that you want to keep in mind. It's the same exact kind of a note that Bank of America that I just showed. However, in this particular case, there's a line that stands out for me. Thus, an approval is more symbolic, supporting the view that Amgen has a pipeline of biosimilars with $3 billion peak revenues possible for Amgen management and not in consensus that will be coming over the next 3 years, and the others such as Avastin, Herceptin, etc. are more likely to launch than Humira. Right there is the key of this entire note. $3 billion in peak revenues. Biggest one is going to be Humira, but there are also other drugs that Amgen is making biosimilars for, and none of that is in consensus view. Absolutely none. To show you that, this is a chart that I like to come back to all the time in my Thinkorswim account. And basically, let me make this clear a little bit. Okay, see this note over here? This is the fiscal year 2017 estimates right here. And you can see how they have been flatlined the entire almost last 2 years. Even though fiscal year 2016 has gradually moved higher, it has flatlined the entire 12 years, last 2 years. The point I'm trying to make is that the stock with that $161 over here, basically the consensus estimates for the last 2 years for fiscal year 2017 have not moved. They're still around $12.50, which spits out forward valuation of about 13 times forward earnings. Remember, we're already in the second half of 2016, which means you have to start evaluating Amgen based on fiscal year 2017 earnings estimates, and they have not moved. And right here, RBC Capital note that I just showed just told you that there's about $3 billion of peak revenues that is completely left out of consensus view, despite this huge FDA 26-0 vote for Humira biosimilar. If that comes into the picture, or if there are any signs of litigation coming to end with Europe and Japan already giving a go-ahead to Amgen for so many other biosimilars, it's only a matter of time, in my opinion, that these forward earnings estimates are going to rip higher. They're going to shoot higher big time. The margins on these biosimilars are very huge because the R&D cost is very, very low. So that's why when those are brought back into the picture, I don't think the company is going to do just $12 in EPS. It's going to probably shoot higher towards 13, 14, maybe even higher. Understand that Humira alone, even the small market share based on some of the studies that I've done and based on what RBC Capital is saying there, could represent as much as $3 billion divided by $22 billion historic annual revenue run rate, which means you're talking about 15% increase in revenue just from this one biosimilar. And there are other biosimilars also coming. So to me, the way I look at this package, this entire thing, at 13 times revenues and potential for this huge approval coming and a launch after that, even though it's going to be litigated, I believe the consensus estimates are too low and expect the stock to move higher as these estimates move higher. But let's get very conservative on this. And let's suppose that this approval is never going to come. Or sorry, the approval is going to come, but the launch is never going to happen because it's going to be litigated forever in the courthouse. And we don't know when that's going to end. All right, let's even approve that. So what is the worst case scenario here? In the worst case scenario over here, we will basically revert back to evaluating Amgen based on its core earnings power without Humira biosimilar, right? That's basically what you would expect in that particular scenario. So how is that looking? Let me just pull up my notes over here. What I'm going to do is, let's see. Here is the activity tracker. And I'm going to go here. I'm going to type Amgen. And here's my note. I'm just going to pull it up. I'll just save it right here. Here you go. Oops, sorry about that. Here you go. There are my notes on Amgen. What I want you to focus on the history over here. April 28, Q1 earnings, 290 versus 260, beat. Q1 revenues, 5.53 billion versus 5.32 billion, beat. Fiscal year 26 estimates, raised. $11 versus $10.80 estimates. It was raised. January 28, the quarter before that, EPS 261, 229, big beat. Revenues 5.54 billion versus 5.53 billion, in line. Fiscal year 26 EPS estimates 1080 versus 1066, raised. Revenue guidance also raised. Go back further to October 28, same thing you will see here. Q3 EPS 272 versus 237, big beat. Revenues, big beat. Also raised quarterly dividends by 27%. Fiscal year 2015 EPS guidance at the time raised from 975 to 1002. 3 straight quarters of beats and raises. And I expect that, and I mean 3 quarters of straight beats and raises, I expect that that kind of momentum in the earnings momentum to continue. So in the absolute worst case scenario, we're looking at a stock that has a very strong earnings momentum, yet when I look at the price action right over here, it has not done anything. It has been flatline for the entire year. And here is the weekly chart. It comes up to 165 and backs off and backs off. In absolute worst case scenario, this thing with Humira gets litigated in the court despite the FDA approval, which is absolutely coming on September 25th. And the stock basically tries to break out but doesn't accomplish much despite the good earnings momentum. At a minimum, you have a company that pays 2.7% dividend yield, and you have a 3 straight quarters of beats and raises, and you have a stock that's trading at 13 times forward earnings. If this catalyst works out that nobody has in the consensus view, I expect this to break out and go all the way to 180 plus. So, what is the trade over here? The trade I'm recommending over here is pretty simple. I'm going to go out. Now, earnings are going to be coming out on the last week of July. All right, so it's going to be sometime in this last week of July. And then after that, the catalyst we have inside in September 25th. And that September 25th means that August month is not going to cover it, and September month is not listed in option chain yet. Even if September month was listed, it's not going to cover it because September 25th is after September expiration. So we have to go all the way out to October. And in October, we have 2 choices. I recommend buying straight calls over here. Because of these catalysts, no signs needed, no spreads, no than just buy straight calls. So which ones? We can go with October 165 or October 170. I'm electing to go with out of money October 170 calls. I understand these are good $9 out of money and carry a lower delta of 0.29, which is just below my threshold of 0.30. But I don't want to spend a lot of money on this, and I believe the catalyst is strong enough, this stock is going to pop. I mean, if you think about this, this is long-term chart, right? So the stock right here, the 165, I mean, watch where my trigger is. The 165 is right around here, and 170 is right here. And we're going with 100 days out expiration in October, buying 170 calls for less than $3. So between buying call options here with a break-even point or over here, it's not significant difference. I think if it's a breakout with the catalyst, this thing is going towards 180. So I'm okay buying slightly out of money October 170 calls straight. Buy them for $3 or less. Currently the bid is 289 times 299. That's the trade.